everyone, this is Matthew Cruz, and I'm going to be sharing with you the February USDA supply demand report that came out this morning at 11 a.m. Futures trading does involve risk. I'll let you quickly read through that. So overall, kind of a neutral, maybe slightly bearish report today. Not much for big news. I think the trade was pretty close to estimating what the USDA came out with. Corn, you can see, came out with 1.267 billion bushels, so they did increase that by 25 million bushels from last month here. Pretty close to what the average trade was looking for, so no big surprises there. Soybeans came in at 225, 15 million bushels more than last month. Probably a little bit more than what the trade was expecting there on average at this 211. Similar situation in wheat, not much change from last month. Last month we were at 567 million bushels. This month they pegged it at 568 million bushels. So modestly less than what the average trade was looking for in the wheat. Looking around the world, that Brazilian production was left unchanged by the USDA, with soybeans at 153 million metric tons, corn at 125 million metric tons. Now, CONAB this morning came out and reduced that a little bit less, possibly because of some of the late planting that we're seeing in the safrinha and some of the drought from the first corn crop. In the case of soybeans, USDA finally starting to catch up and lowered Argentina soybean production down to 41 million metric tons, down from 45.5 million metric tons. Now, last month we had said that they were lagging quite a bit and reducing that production number, and so we're seeing them catching up here now to, I think, most people, and we still may see some further reductions yet in that soybean production. Corn came in at 47 million metric tons. Last month we're at 52. Everything was left unchanged in Ukraine in terms of corn production at 27, and wheat production in Ukraine at 21 million metric tons. Global ending stocks, were pegged at for corn at 295.3 compared to 296.4 last month at this time. Soybeans at 102 compared to 103.5. Wheat came in at 269.3 compared to 268.4, so pretty close to the wheat. And again, Chinese imports consumption from the US were left unchanged at 18 million metric tons for corn and 96 for soybeans. Kind of breaking down the corn balance sheet, you can see here that most of the beginning stocks, harvest acres, all that was left unchanged. Really the only change they made here was a reduction in ethanol usage. So the ethanol consumption has been lagging, and so they made a modest reduction here, 25 million bushels. So not a huge amount, but that does get chopped off here and to the bottom line. We add that onto our ending stocks, and that's how we get from that 1.242 to the 1.267 billion bushel number. Looking at soybeans, the only change made was a reduction in the crushings, and you can see that amount here reduces that to 2.230 billion bushels. And so we add that on to our ending stocks here at the bottom, 15 million onto that 210. That's how we get that 225 million bushels. So still pretty low ending stocks on soybeans. And so we're probably going to see it hover back and forth there until we get some potentially a new crop production coming in. Looking at wheat, very minor adjustments here made to food and seed. You can see here they reduced food usage by 2 million bushels, increased seed usage by 1. So we just add that 1 million bushel on to the bottom line. That's how we get that 568 million in ending stocks. Looking at the corn trade today, this is March corn. This is not the close. We were up 3 3/4 at this time. We're just been kind of trading sideways here for the last couple weeks or more. You can kind of see that we're kind of working into a coil here, and I think potentially looking for a major breakout. Of course, the question is to the upside, to the downside. I think, in my opinion, the risk is probably more to the downside at this point, but time will tell. So we're kind of been trading within roughly a 7-cent range today, and we didn't really get any good news, and so well, we started up almost what we need to see happen first is break up above the 680 level. Eventually we need to get back above the 690 level if we're going to see some follow through on the corn market. Looking at the soybeans, we continue to be range bound. However, it is a upward moving range, just kind of bouncing back and forth here in this channel. And so we were up 3 cents at this moment, but this is not the close in the March soybeans. And so I think that longer term, buying, there are some buying opportunities down at this 15 to 1520 area. I still think that there's a reason that we can see soybeans moving higher, but for the time being, we continue to be range bound in this channel. And then wheat, we've just kind of been in la land here in the wheat the last couple days. Hopefully, possibly we've formed a bottom here around the 723 area here in the March wheat. We're up 11.5 at this time, but again, this is not the close. But we need to first break above this 775 area, and then I think we'll begin rewarding some more sales. But we have had a really tough time building any traction, but we'd really like to see them move back above this $8 if we're going to be able to sustain any rallies. But it's quite possible we may just trade back and forth within this range at the bottom of the trading range here. So if you're a bull, you're going to point to the fact that it looks like inflation may be beginning to pivot, which means that the Fed might be more interested or willing to either stop interest rate hikes or possibly in the near future begin reducing interest rate. You can point to some of the drought in the Western Corn Belt is still lingering. You can point to some of the dryness in Argentina and southern Brazil, of course. We are at peak production acres, it would appear, and so it's going to be hard for us to increase our production the way that we have in the past. If we increase corn acres, that just decreases soybean acres, and vice versa. And so you could also point to that the corn planting and the second crop corn in Brazil is a little bit behind schedule, and I think that might be one of the reasons that CONAB reduced their production. If you're a bear, going to point to some of the obvious geopolitical tension with China, that balloon, for example, that they shot down recently that looked to be monitoring and taking surveillance images across sensitive national security areas across the United States. Corn exports continue to weaken. Ethanol, it continues to weaken, as we saw in this report today. You can, of course, talk about potentially adding a little bit of 1 to 2 million acres of corn for next year. I don't think there'll be much more than that, but I think the profitability on corn is a little better than soybeans, and so naturally farmers might lean more towards planting more corn, but they're still fairly limited in what they can do. And then of course Brazil's production, even though it's getting hurt in southern part of Brazil, is still going to be, it looks like, much higher than last year. So that's all I have for you today. Thank you for watching. As always, you can subscribe to our YouTube channel if you like this, and we'll send out more videos. And if you have any questions, feel free to give us a call in our office. Talk to one of our brokers at 712-227-1110. Thank you and have a nice day.